The Pandora Papers, published by the International Consortium of Investigative Journalists, made it clear that the wealthiest members of society are willing to go to difficult lengths to hide their wealth from the government and the public. Welcome to Rich Addict. In today's video, we will take a look at the various methods used by the ultra-wealthy to hide their money. In the first 17 months of the COVID-19 pandemic, the world's wealthiest people saw their wealth increase significantly. Some, such as Jeff Bezos and Mark Zuckerberg, made tens of billions, and Elon Musk added over $150 billion to his net worth. Despite this, the rich managed to pay very little taxes. This is usually accomplished with various loopholes that exist in the system, but sometimes the wealthy go to great lengths just to hide their wealth with the goal of concealing it from the prying eyes of the government. There are numerous ways the rich hide their money, but the most popular is likely the use of offshore banking. Offshore banking is notorious for its involvement in tax evasion and money laundering activities. It is notorious for having cost governments trillions of dollars in taxes. The wealthy have hidden around $36 trillion in various offshore accounts. Offshore banking involves a sector of the financial services industry that enables wealthy clients to hide their assets away in order to minimize taxes. This is usually achieved through basic methods built on principles of low regulation and disguised ownership. Offshore accounts are basically tax havens for the rich, where they can store money with little to no tax liability. Switzerland and the Cayman Islands are two of the most popular places to hide private wealth. The rich hide their wealth in what are called secrecy jurisdictions, where money is untaxed. Offshore banking on its own is not illegal unless carried out with the intent of tax evasion. The government considers tax evasion to be a federal offense under the IRS tax code, and those who commit this crime are punished severely, either by monetary fines, prison time, or both. The wealthy also reduce taxable income in a process that is known as conservation easement. Conservation easement arose as a result of the Congress's decision to allow an income tax deduction for owners of significant property who relinquish specific rights of ownership in order to keep their properties for their future generations. Unsurprisingly, this has been used as a loophole by many of the wealthier members of society. The policy behind this tax provision has been abused, to say the least, and the rich persistently take shockingly large deductions for easements. People use this strategy to reduce their adjusted gross income by 50%. Another way the rich hide their wealth is by simply giving it away. That's right, financial gifts are another way that the rich hide their money. People often hide funds by giving them to their friends and family who would have to pay a much lower tax burden. In the United States, it is legal to give gifts that are lower than $16,000 tax-free. It is common for the wealthy to hold assets until death and avoid capital gains taxes by passing property to their heirs. The inherited property's value typically adjusts to its worth on the date of death. This is often called step up in basis. They also use dynasty trusts, which are estate planning strategies that enable them to pass wealth down to their heirs without incurring estate taxes at each death. Because the wealthy usually have diversified portfolios, they are able to take advantage of a wide variety of loopholes. An example of such a loophole is the new trend of investing in qualified opportunity zones. Qualified opportunity zones refers to zones that are disadvantaged and in need of economic development, particularly job creation. If the investments last longer than 10 years, then they don't have to pay any taxes on incremental gains. Life insurance is another way that the rich hide their wealth. Taxes must be paid on money prior to going into a life insurance policy. As soon as the money in the policy is part of the cash value, it becomes tax-free. This is also commonly used as a form of tax-free income during retirement, since no payments have to be made after the policyholder's death, because all outstanding loans are paid by the policy's death benefit, and the rest of the death benefit is given, tax-free, to named beneficiaries. People also create sole proprietorship, estates, partnership, S corporations, or trusts to gain tax deductions that can't be accessed by most of the population. This deduction allows eligible taxpayers a 20% deduction on their qualified business income, as well as a 20% deduction on qualified publicly traded partnership income and qualified real estate investment trust dividends. A very controversial way that the rich hide their wealth and avoid taxes is with the use of charitable investments. The typical approach is to make large donations to charities. These are often made as direct payments or gradual and frequent payments into the charity savings account. These funds, even if they have not been distributed, are not taxed. It is only expected that it would be used as a means of hiding money. Lastly, the most accessible form of hiding money, even for members of society who aren't filthy rich, is the use of retirement funds. Retirement funds have proven to be an effective tax shelter. A 401k lets people defer tens of thousands of dollars in taxes annually and avoid taxes on earnings made from investments. As the world continues to evolve, the rich continue to find new ways of hiding money, such as NFTs and decentralized currencies. That brings us to the end of today's video. If you enjoyed this video, you can let us know by hitting the like button. To be among the first to know when we drop a new video, subscribe and hit the bell button for regular notifications. Until next time, have a great day.